Run these 5 reports and let me know which one is giving you green light that your business is growing and which one is giving you more concern. These are 5 types of report that every business must need to check to know if they are growing. Running a business without understanding if your business is growing is a time bomb, and it is part of the most important thing that every business person want to check. The number one type of report you want to run is a profit and loss report, also otherwise known as your income statement. Here are 4 things you look out for in your income statement: your revenue growth, your cost of sales trend, your operational expenses, and your net profit. Now, if your revenue, let's say for last year, was 1 million naira and this year you did 2 million, that means your revenue growth has doubled up to about 100%. That is a growth process, but you can't measure that alone. The next thing you then look out for is your cost of sales. Is the amount of what you incur to produce what you sell or to produce what you render as service, is it increasing on year over year? And what is causing that increment? And what are the measures or metrics you can take to reduce your cost? Because for every business, is either you are making more profit or you are reducing your cost. The next KPI you want to check is your operational expenses. Operational expenses are other expenses like your electricity bills, your telephone, your transportations, your carriage. All of these things make up your operational expenses. Are they increasing year over year? What are those things that are increased, or what are the extra costs you can reduce? Because whether you like it or not, if your operational cost is increasing, it's automatically affecting your net profit. Your net profit is the last bottom line of your profit and loss statement. And that is why if your revenue growth is increasing and your net profit is dropping, then your growth is fake. Because what that implies is that you're actually increasing by your sales, but your operational cost or your cost of sales is eating into your net profit, which is supposed to act as your retained earning for the business. The number 2 type of report that you must prepare to calculate if you are growing is your cash flow report. The cash flow report automatically shows you your cash flow trend. What are the money coming into your business and the money going out of your business? I have always said this: your profit does not equate your cash flow. Your profit statement can be showing you that you've made 500,000 naira as profit for the year, while your cash flow, the actual cash your business has retained, will be showing you 100,000 naira. And these are where most businesses get misled by just looking at their profit and loss statement. Your cash flow report will show you what are the total money that came into this business for this year and how did you spend this money. Basically, cash flow reports are usually splitted into 3 types. We have cash flow from operating activities, we have from financing activities, and we have for investing activities. Your cash flow from operating activities will show you how much cash that you use to run the business operation. The cash flow from the financing activities will tell you what are those things, or where did you get this money from? Did you collect more money from the bank? How were you able to run this business? Cash flow from investing activities will tell you if during the year did you take some money from the business to buy some assets, something useful, worthwhile, that will be generating back money for the business. This will show you exactly where those money has gone out. And one thing you need to note is that your cash flow should be growing. If your cash flow